Okay, hello and welcome back again. This is Harsh, your host, on behalf of GTCFX. A warm welcome once again. I thought that we should start with about 2 minutes to go because uh, I'm seeing many of them logging in, and when they see the screen paused and nothing happening, they uh, log out some due to some reason. But officially, there are still a couple of minutes left. Meanwhile, if you allow me to just introduce about the program. It's about we are going to go for 10 weeks from now. And we are going to start from absolute basics. So if you are not aware about anything in technical analysis, please don't worry at all. We are going to touch base with the roots, and these sessions will be conducted every Tuesday uh, at 4 p.m. Dubai time for the next 10 weeks. The first 7 weeks will be touching base with the basic technical analysis concepts, and the last 3 weeks, the 3 sessions, it will be the Elliott Wave model. So, in a nutshell, we are going to start from the scratch and we are going to end with one of the most interesting topics in the world of technical analysis today, and that is the Elliott Wave theory and how to practically put the counts on the chart and to be able to trade with confidence. Once again, I thank you with all humility to take time and join these sessions. Uh, and before we begin, by any chance, if you are into the world of sales or you have your team, then please encourage all others or your team members and your clients and partners to join across these sessions. Mind you, all the sessions will be recorded, and those who are joining in the middle of the series as well, they will have all recordings from my side. It will be made available the moment there is a downloadable copy. So please don't worry on that and help us spread the word. These sessions are specially designed for the benefit of clients, traders, and partners, and for all of us. And lastly, before we start, these sessions are your sessions. I'm just a facilitator here. So please feel free whenever you have any doubt or question or you don't agree with me, kindly stop me then and there. Just send me a message or you can unmute yourself and speak as well. And I'll do my best to solve your query right then. If not possible, through an email, I'm going to leave my email address, official email address, at the end of the session. All right, so I think it's time now, and we are just 1 minute past 4 p.m. Dubai. Let's get started off. So the first story is okay. We've got a message. Okay, thank you, Mr. Mohammed. Thank you for your kindness, and I hope that the screen is properly visible and the audio is clear. I'm going to keep the video stopped from my side to save bandwidth. Kindly excuse me for that, but believe it or not, there is a real person talking to you right now. Uh, it's not an AI. Okay. So let's get started. The first session is about sign language or the chart patterns. See, I really like to call these as stories, and I want to give a human touch to each story that we do. So it's very important for all of us to please, for the continuity's sake, I request all of you to please take time out 45 minutes, 4 p.m. Dubai time, and join these sessions. You are going to be amazingly surprised at the end of the third story. I repeat, sir, you'd be amazingly surprised at the end of the third story itself. It'll cover almost 80 to 85% of the entire series, and you start loving the game then thereon. All right. It doesn't mean that the first two stories are boring, but it's the transformation that will happen in the third story, and fourth story, which you start loving it, because this program is going on since 2008, and I've God's grace trained thousands of traders across the world. Just as disclaimer, standard disclaimer, whatever we are going to discuss here is for educational purposes only, and should not be construed at any form of personal or any form of other advice to trade or anything else. Okay, let's get started off. Okay, before so why do we call this as a sign language? It's there's a reason why we have named this as a sign language. Otherwise, we would have called it Japanese candlestick chart patterns. The sign language gives us a human touch. It makes us understand that okay, it's some kind of language that we are going to realize or know in the next 30 to 40 minutes. We'll be able to cover it in the next 30 minutes effectively. Uh, and as we would like to communicate with each other as humans, okay, that's the way we communicate with the markets, the financial markets, and that's why the name sign language. And the only thing is that here the communication is not two ways, but it is one way. I repeat, sir, the communication here is not two ways, it is one way. That is, market is the boss, and it is going to communicate to us what proposedly or supposedly it is wanting to do in the next 1 hour, 4 hours, 8 hours, one day, one week, one month, or several months, or several years. That's exactly or precisely what the market does. All right. Now, I can give you a very basic example of what happens, what really happens when we don't understand the language. என் பேர் வந்து ஹர்ஷ் இருக்குது. நான் வந்து இந்த சீரீஸ் டெக்னிக்கல் சீரீஸ் கிளம்ப போறேன். இப்போ வந்து ஃபர்ஸ்ட் ஸ்டோரி தான் நம்ம பேச போறோம். தட் வந்து சைன் லாங்குவேஜ் சார்ட் பேட்டர்ன்ஸ். நம்ம did you understand anything, everyone? I mean, if you interact with me, it's going to be wonderful. I mean, did anyone understand any of what was told in the last minute? Unless you are a Tamil. Yes, yes. A male. It is going to be in English only. I was trying to make a point here. You were not able to understand anything because I was talking in a different language. I hope the point is now taken. Yes, yes, Amel, it was intentionally done because I was trying to prove a point here. It was done in a different language. It was I was speaking Tamil language. So if you know Tamil, it is you would understand. Otherwise, you would not understand. Now the point is I was trying to make here is markets talk in a specific language. All right. And if we don't know that language or if we don't understand that language, then we are in a problem. We cannot deal with what the market is trying to do. Is this point understood properly? What is the importance of sign language? It's the first basic step we need to do or we need to take before we can start trading. All right. There is a criteria to start trading, and there are actually 4 stories which we are going to discuss in the next 4 weeks. Until that time, we are not ready to trade. Okay. I hope that it's all clear about the language. So let's get started with the chart patterns. Now, the language of markets. What is the language of markets? It is charts. And what is a chart? I know everyone must have seen that. You might be more experienced than I am. A chart is a simple pictorial view of price versus time. I repeat, sir, in very simple terms, chart is a pictorial pictorial representation of price versus time. And it could be of several types: candlestick, bar charts, line charts, or pie charts. Line chart and pie charts are of no use for technical analysis. Bar charts are mostly used by the Americans on the Western side, and on the rest of the world, mostly the most prominently used is the Japanese candlestick chart. And I'm sure that you all know that. Okay, so let's get started with the only one more request, sir. Please have faith on what we are discussing or what Hirsch is discussing. Just for 3 sessions, only 3 sessions. This one, the next, and the next. And you will start having your faith will start getting converted into a belief system. That is for sure. Okay, so let's get started off with the first basic pattern, and things will become very serious from here on. And everything that is important, we are going to discuss. Okay, there are two basic chart patterns. It's going to be very simple. Sometimes you're going to feel what is her talking about. All this is very childish. We all know this. I don't know. But please hold on till 3 sessions. Okay. The first is the left hand side, the bullish candle. Now, from here on, please sit tight and listen carefully. All these sessions are recorded and will be made available to you. The bullish candle and the bearish candle. Before we go into the definition of bullish, please remember there are 4 points each candle is going to have, without which a candle will not get complete. It is open, close, low, and high. These are the 4 points. And the second thing to remember is that we can divide a candle into three physical parts. The first is called body, which is the cylindrical part. The second are the wicks. I have pointed out here the wicks, the upper wick and the lower wick. Sometimes they are also called, they can be called shadows as well. And the third is the length. Now the length is from the top to bottom, high to low. The distance between the highest point and the lowest point of the candle is defined as length. From now, your visualization and what you see is going to be what you do. No matter what is your background, from now on, only visualization is going to work. All right. And by the end of the program, I'll make sure that we are spatially uh, intelligent. That is, we are able to see something which normally others are not able to see on this chart. Okay. So let's try and define, or let's specifically define what's a bullish candle now. When the close is significantly higher than open, it is called a bullish candle because control is lying with the bulls. I repeat, when close is significantly higher than the open, it is called a bullish candle because control is lying with the bulls. I hope we are all together until this point. And on the right hand side, if we define a bearish candle, it goes like this. When close is significantly lower than the open, it is called a bearish candle because bears are in control. If you all are with me, if all of us are in the same page, please kindly send an OK message so that I'm going to go to the next screen now. Okay, perfect. Thank you so much. So we have unanimously we have agreed that when close is significantly higher than open, it is a bullish candle as control is lying with the bulls. When close is significantly lower than the open, it is called a bearish candle as control is lying with the bears. Yeah, okay, thank you. And let's now go to the next page. So these are decisive candles, okay? Decisive candles. We can decisively say it's a bullish, decisively say it's a bearish, correct? Let's put them into a decision box. And now the next screen, please. And I request your participation now. It's an interactive session. Without your participation, it would be difficult for me to understand are we on the same page or not. So on this screen, the exercise is as follows. We have to identify each candle. These are also candles, different shapes and different sizes. There are many more. To be specific, there are 96 such candles or 95. Each candle has got different shape and name. If you are interested in knowing the information on the names of the candle, you can Google, an entire list will come across. But believe it or not, those names and shapes will not help us make money. Now, the next simplification will help us make money. And the simplification is this. Please look at every candle starting from your left, the first one, and identify into a category. Now, the categories are three categories. Either you'll say bullish, put it in a bullish category or bearish category or indecisive. There are only three categories: bullish, bearish, and indecisive. I repeat, only three categories. We need to put each of them into whichever category we think they fall into. And the answer has to come from your side, sir. It's going to be very exciting. Please don't hold yourself. Let's start with the first one. Okay, Mr. Vijay Gaurav has given it is an indecisive candle, the first one. Amil is bullish, Sada bullish, Khalid, Mr. Khalid bullish. We are 12. The more participation, the more interesting it will be. Okay, Karthik. Okay, Karthik, I can understand it is a hammer, but whether do you think it's a bullish or a bearish or an indecisive? That's it. We don't want the names of the candles here. It's good that you know that. Okay, Karthik has said it's bullish again. Mr. Shaji is also bullish. So most of them are bullish. Most of them are bullish. And only one gentleman among us, Mr. Vijay, has said it is bearish. Wow, that's amazing. Okay, rejecting bullish. Mr. Tahir, let's be very simple here. Okay, either you say bullish, bearish, or indecisive. That's it. Please. I don't know. I have limited knowledge. Let's say I don't know what is rejecting bullish. Perfect. So 99% of all of us, I'm not answering. I don't know. Let's find out the answer. Okay, my request is my request to all of you, please, except Mr. Vijay, kindly have a look at the bullish pattern which we have unanimously identified and agreed just 5 minutes back. Kindly have a look at this bullish candle, okay? And I'm going to flip the screens for 2-3 times. And the one that you're calling bullish, kindly have a look. Again, I'm requesting from now on, what you see or what we see is what we are going to do as traders. Okay, I think you've had a good look now. Now the question that I want to place with all humility, sir, do you find any physical difference between the unanimously agreed bullish candle and the one that we are defining bullish here? Do you find any physical difference? Yes or no? Simple, simple answer. Let's not complicate. Any physical difference? Yes, there is a physical difference. Everyone who had said it's a bullish candle, they are all agreeing that there is a physical difference, correct? Now, sir, again with all humility, if there is a physical difference between the unanimously agreed bullish candle and the one which you are proposing to be a bullish candle, how is it possible? There can be only one bullish, only one type. Yeah, Mr. Khalid has said very long lower wick. The point I'm trying to make here is the unanimously agreed bullish candle, the definition goes like this. Karthik change பண்ணிட்டீங்களா? Indecisive. Okay. Karthik has changed the decision now. He's now into indecisive mode. He says indecisive. Now the point I'm trying to make for all the rest of them is as follows. Please listen carefully to the definition again. When close is significantly higher than the open, it is called a bullish candle. I repeat, sir, when close is significantly higher than the open, it is a bullish candle. It is a bullish candle. Do you think this close is significantly higher enough to define it as a bullish candle? Yeah, Khalid is saying indecisive as well. But others, do you think that this close is significantly high enough to define it as a bullish candle? Now, there can be another question. Harsh, what is the criteria of significantly higher? Is there a price? Is there a few points? Is there a many points? Now, the answer is again lying in your eyesight. Now, I'm trying to do the most simplification as possible. There is no further simplification possible to this. Please look into this candle once again and tell me which part of this candle comes first to your eyes. Is it the body or the wick? And then look at this candle and decide which part of the candle comes first to your eyes. Is it the body or the wicks? If the body is coming to your eyes first, then it is a bullish or a bearish candle. If the wicks are coming, then they are indecisive. Do you understand, please? I hope that we all of us are on the same page now. I hope we are all on the same page. Whenever you see a candle, whenever you see a candle and the body of the candle comes first to your eyesight, that candle has to be a bullish or a bearish candle. Okay? And anything else coming to your eyes first, whether it is wicks or length, it has to be an indecisive candle. Is this point taken by all of us, please? Because if this simplification is not taken with conscious heart, we are going to find trouble going forward. All of us, Vijay ji, you were already there. Okay, crystal clear. Thank you so much. So it's all simplified. Now, please understand the first rule when you start looking at the chart, please. The first rule that you have to always remember from now on until the entire analyst career is that there are only three types of candles available on the chart. Only three types. There is no fourth type at all. And it is 15 years. I'm into 16th year now. I don't know the fourth type. There are only three types: bullish, bearish, and indecisive, period. If we are not simplifying the chart this way, then we are going to be in trouble when we start trading. I hope it is all very clear. And the next screen again in front of you, please let me know, all of you kindly, Where do you put these candles now? The second one, the third one, the fourth one, and the fifth one, and all the 95 remaining patterns. They are all indecisive, sir. I hope we are all in the same page now. Perfect. Wonderful. All right, sir. Believe it or not, we have done the grammar portion of the language. All right. Let me remind you, we are doing a sign language. So the first portion is the grammar. We've just completed the grammar. There are only three patterns or three types: bullish, bearish, and indecisive. Let's go to the phrase now. Now the game becomes interesting. And this is going to help us address the first question before we start, before we are eligible or technically eligible to start trading. And that first question is what to do. And by the end of the third story, we will be having answers to all four questions: when, where, and why. The moment we have answers to what, when, where, and why, we are ready to technically trade, sir. And that's why I'm asking and requesting, please be with me for three stories, and you will not leave the session then. And also encourage others. That's the main point. Okay. So let's get started with the phrase part. Okay, this we have done simplification. Bullish means bulls under control, bearish means bears under control, and indecisive means none has control. Both are fighting, sir. All right. All right. So now we are going to discuss four powerful practical signals. Basically, there are three signals. The fourth one is from the trading point of view, but it has to be done after a bit of experience and confidence that you gain yourself. So I'm going to say we've got three signals to buy and three signals to sell, additional two signals. So total eight in your pocket, in our pocket. And believe it or not, sir, there are only six signals. There are only six perfect signals where we can execute either buy or sell. And even more simplified manner is at one point in time, we will have to remember only three signals because the market cannot be bullish and bearish at the same time. It would either be bullish or bearish or indecisive. For all those who are joining us late, please don't worry. We are actually starting the chart patterns now, and the recordings will be made available to you immediately when the download copy is ready. All right. You just need to send me an email, which I'm going to leave it at the end of the session, please. So please don't worry that you missed it. But since you are joined, welcome again, and please stay on board. We are just starting to discuss the six important signals: three signals to buy and three signals to sell. All right, now again, the most interesting part is your eyesight, is your vision. Now, this yellow arrow, the arrow I've shown here, is what we have to practice looking at the chart. And the chart story will be something like this. And of course, feel free to create your own stories when you are on the charts, please. Now, I would like to create this story as myself as follows. That the market is telling us a story that okay, I've been dropping, I've been falling from a higher point here, uh, and uh, and now there has been a fight. There's been a fight going on between bulls and the bears, and here the control is just gone to the bulls. This is the story that the market is telling us. Once again, quickly, the market is telling us that I've been dropping from a certain higher price. There is an indecisiveness. The market bulls and bears are fighting. That's what an indecisive means. And now the control is gone to the bulls. So why don't you buy or consider buying me. All right, that's the story which the market is saying. All right. Now, technically, how are you going to identify this first bullish signal, which is called as the morning star? Please listen carefully. If you cannot remember the name, don't worry at all. The most important part is the shape of the pattern. We need to just remember that needs to go in our subconscious mind. All right. The first pattern, the first candle of the pattern has to be a bearish candle. Now we know what's a bearish candle. All right. The second has to be an indecisive, and there has to be at least one indecision candle. I repeat, sir, at least one indecisive candle. There can be more than one, as I've shown three over here. It can go up to 15. The indecision candles can go up to 15. All right. Commodity markets mostly produce 15 up to 15 indecisive candles. And suddenly a bullish candle would appear. And the most important point to remember is that the body of the bullish candle will be should be at least 50%, I would say 60% of the bearish body. The body of the bullish candle should be 60% of the bearish candle, not in the category, not in the shape. Bullish body can start lower, okay? So it doesn't need to be uh, I don't know what happened. It just said it's transcribed. Just say okay. I also did so. So, for example, the bearish body is 50 points, okay, 50 pips. The 60% of that is what? 30 pips. The bullish body has to be of 30 pips, whether it appears on lower side or on the upper side. There might be a gap down or gap up, specifically if you're dealing with stocks. Don't worry about gap downs and gap up. Just see if the body is 60% of the bearish body or not. If it is, just go and buy. Now you don't need to calculate, sir. Believe me, there is no need of calculating the points. The moment you see the chart, you will realize, all right, that's a 60% short, and that is a bullish candle. The action needs to be taken is it has to be bought at the opening of the next candle. I repeat, sir, you have to buy the open of the next candle. Why the next candle? Because the pattern should be complete. Many times, due to emotions, we tend to buy while the pattern is forming, while the candle is still forming. And sometimes you may see a drop by the end of the day or the end of the candle. All right. And we might get stuck. So please remember, let the pattern complete by the next open. Okay. And we are good to go. So that's the first sign, morning star. This is the second one. It's called the tweezer bottom. Why tweezer bottom? Here goes the story. The market is telling us a story here. I was dragged lower by bears to a certain point, but bulls came back in control very strongly and closed the market near the open. This story repeated itself. Bears again dragged lower to the same level, and from around the same level, bulls took me back again and closed at the same open, near to the open. Now, this story has occurred twice. All right, so why don't you buy me? I think I've bottomed out. Maybe I'm going to go higher from here. This is what the market says. That's the tweezer bottom. Two indecisive candles. Now, this is an indecisive candles, both of them. But when they come together, it is a powerful signal. There should not be any candle in between, sir. Two candles, two indecisive candles back to back. Uh, Here the significances of the lower wick, please. Please understand the previous one, the significance was of the body. The bullish body covers or is 60% of the bearish body, or at least 50%. Here the significances of the lower wick that makes it a tweezer bottom. And the last one, the most simplified, the first candle is a bearish candle, the second candle is a bullish candle, and the body of the bullish candle should cover the bearish body 100%. So if you pick up this bullish candle and put on the bearish one, the bearish body will not be seen. That's an engulfing bullish. Clear? So the first pattern, significance is of the body. The second pattern, the significance is of the lower wick. The third pattern, again, the significance is of the body. Practically, even if it is not 100% touch, 80% or 90% or 95%, I personally would like to go on the long side. But please remember, we've got to execute the open of the next candle, not the existing one. If we are all on the same page, please type OK. And before that, that is the fourth signal. It's a practical trader's signal. It's not a complete signal, but not me, but most of the traders would like to go with this candle. It's called a hammer, if you want to name it, or it's actually called an indecisive candle. It is shaped like a hammer. It's also called a pin bar. It's a trader's favorite, aggressive trader's favorite. This candle mostly uh, is followed after by a falling market. Okay, the preceding part is always falling, and suddenly this indecisive appears, saying that the bulls and bears are fighting now. Probably the bulls are going to be in control. Now that's a probability. That's why I'm saying it's not a complete candle. It's a practical trader's pattern. High probable direction projected higher. And I'm going to flip the screen for just a moment, because we are also going to cover practicals, without which this program is completely irrelevant. I'm going to show you what an pin bar would look like. Can you see this candle where my mouse is exactly? This is a pin bar or a hammer. This is Euro USD daily chart, and this is what happened yesterday. We still don't have a complete pattern, but this is a hammer or a pin bar. Most aggressive traders would go long based on that. Okay. Okay, we are coming to the chart in just a moment. Give me 5 more minutes. We need to cover the bearish signals. So what would be the trading strategy for the bullish for the bullish patterns? This is very it has to be simplified and again put into subconscious. In a rising market, identify bullish signals, period. What most traders do is they identify bullish signals in both markets, rising and dropping, and then we get stopped out. Bullish signals are good to be identified only in a rising market and acted upon. You've got to leave it in a falling market, all right? Because the market is headed north, not south. Three of them, morning star, tweezer bottoms, engulfing bullish, are complete patterns, and pin bar is a practical trader's pattern. You got to buy the signal. That means you got to enter buying the next open, and that is what you would like to do. You've got to buy the next candle. You stop below the low of the pattern. Now, the low of the pattern would be the lowest point of the pattern, and it goes around 15-20 pips below the low. All right, the strategy is going to change completely by the end of the third session. This is just for those who are trading a candlestick pattern short term. You can double the risk taken, or you can break even if it's intraday. All right. Okay, the next three patterns are for the bearish side, the bearish signals. Uh, the first one is an evening star. So it's exactly the opposite of a morning star. The first candle is a bullish one. At least one indecisive has to be there. I have shown two indecisive here, but there has to be at least one. And it should be followed by a bearish candle. Again, the bearish body should cover or should be 60% of the size of the bullish body. At least 50%. I personally would like to go with 60%. It gives us more confidence. That's all. Your eyes should be moving like this. I'm telling you, sir, with around 6 months of practicing charts, or even more or less, depending upon how hard you practice, your eyes will move first and the pattern will appear next. This is what happens after a while of practicing. You enter the market before the pattern appears most of the time. That's a very aggressive way to deal, but it also shows a lot of confidence where the markets are turning. And believe it or not, by the end of the fourth story, we'll have not one, but we'll have four junctions which will be meeting at one point. Four junctions meeting at one point, and then we want to execute the trade. So that should be good to trade, right? It gives us a lot of confidence. Tweezer top, exactly the opposite. 2 weeks on the north side. There is no significance of the body. It could be red, it could be bullish, it could be bearish, small body. But the significance is of the upper wick. Again, the story is repeated twice. Market rallied to a point, bears dragged lower by the end of the pattern, and by the end of the chart, it closed very close to the open. Again, rally to the same price, push down to the same open. Significance should be of the higher wicks, for the upper wicks or shadows. So how you'd remember if you hang me on a tree, it would be like a tree's up bottom, and if you hang me upside down on a tree, I would look like a tree's at top. That's how you want to remember. And engulfing bearish, the first body is bullish, the second one is bearish. The bearish body should completely cover the bullish one for the pattern to be valid. I go with personally 90% or 85% as well. That is the some difference between the theory and the practice. And the last one is again a pin bar. It's also called a shooting star. It's normally preceded by a rising market, and what follows probably is a dropping market. As I brought up the euro chart, see the preceding market was a dropping market, a huge, and then we have a neat little pin bar. Uh, High probability remains for a morning star to appear, maybe today, end of the day, or maybe tomorrow, maybe a couple of more indecisions. But okay, I'll bring up the shooting star. Kindly excuse me if we extend the session for 5-10 minutes. That's a shooting star. You can see that. This is because I keep the chart plotted many a times. Here you see the shooting star pattern right where the mouse is, preceded by a huge rally. I mean, it's a 4-month rally, and a shooting star appears. Most probably, high probability remains from here for the bears to come back in control. Watch out for an evening star. We'll be back again next Tuesday to bring up this chart again. So that is a pin bar as well, traders' favorite. So in a dropping market, what we need to do is identify bearish signals, tweezer, evening star, tweezer top, engulfing bearish, and then act upon it, sell the signal. Okay, here's what we do. Let the pattern complete, sell the opening of the next candle, Place your stop loss 15 to 20 pips above the high, and target double the risk taken, only because we are just dealing with the first session here, candlestick. The moment we discuss support and resistance, that is rules of the game, the next one, and then how to play the game, trends and trend lines, the next one, and then the Fibonacci ratios, the next one. Four stories done, this will change. Okay, we'll have exact 6 steps to follow, and we'll have exact strategy to deal with an uptrend, downtrend, and the last session will deal with the sideways. So we'll have 3 strategies by the end of the 7 stories. And then the Elliott wave, which will be an absolutely amazing one if you're interested really to see under a microscope. Okay, so we've covered in this story, first thing, we've simplified the chart, bullish, bearish, and indecisive. Yes, sir? Then we've clearly identified those 6 trade signals plus 2 additional. That makes us 8. Simple strategy for a rising dropping market that will change the end of the third and fourth stories. Before we go to the practice or practicals, just a humble request. Please remember, not all signals are tradable. So just after this session is over, please don't go and find a morning star and buy. You might be still doing it on the wrong side, and you might get stopped out on the wrong side again, and you will blame Harsh for that. And that's why I'm requesting, not all signals are tradable. We need to find those signals at a specific confluence. That's what I keep on saying. We are going to find 4 confluences in the next 3 weeks. One, we've just done, that is candlestick. Second will be rules of the game. Third, how to play the game. Fourth, Fibonacci. So there will be 4 things matching at the same in the same zone. Can you just imagine? Trend line passing, Fibonacci passing, past resistance turning support, vice versa, and a candle appears. Boom. That's why we got to execute, buy or sell. That's why I'm saying not all are tradable. Please hold yourselves just for another 3 more weeks. I would say only 2 weeks, because once you're through with the trends, you're 85% there. All right, it shall be unfolded in the next 3 sessions for sure. And let's look into some of the patterns. I think I will take right away, right on the charts. But just I prepared a chart, prepared some screens for you. So maybe you can have a look at that. That's a morning star. The green boxes, it's a morning star. This is a practical morning star. You see, a huge bearish candle, one indecision, but this bullish candle is not 60%, but you add the next one, and you are more than 60%. It's a practical way to deal. That's a morning star. The next one, a morning star. All these are morning stars. This is a tweezer bottom. I found only one. You will not be able to see right now very clearly. So I'm shifting it to an engulfing bullish. That's an engulfing bullish. You see the bullish candle completely overlapping. That's a practical one. This one is 95% covering the bearish candle. The next one fulfills the criteria. That's a practical engulfing bullish. This one is also a practical. This is a beautiful engulfing bullish. And again, now these are evening stars. You see, bullish, indecisive, 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 and bearish. Again, this is the bullish candle. Indecisive, 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 and bearish. Okay. The huge engulfing bearish candles. Huge engulfing bearish candles. Okay, let's do one practice. Let's do the first practice. The chart is not coming on the left hand side. Are you all able to see the chart properly? Is it visible properly? Can we do the first exercise, please? There are three types of candles: bullish, bearish, and indecisive. Can we do this exercise quickly? Let me do a few candles, and then, or maybe you can do it on your own side. But just listen to and just follow my mouse movement here. I'm starting with this candle: bullish, bearish, indecision, bullish, 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 indecision, indecision, bullish, indecisive, bearish, bullish, indecision, bullish, bullish, bearish, bullish, indecisive, bullish, bearish, bullish, indecision, 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 bullish, indecisive, bearish. Is it enough? Okay. Uh, Let me zoom in. The most important thing that you need to understand is when I shout out, there are only three options: bearish, bullish, bearish, indecision, bullish, 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 indecisive, bearish, indecisive, bullish, bullish. Now here the wick and the body are same. All right. When it happens, go with the body, please. This is the only exception. When the wicks and the body are same, please go with the body. So I put this into bullish, indecisive, bearish, bearish, indecision, indecision, bullish, indecision, indecision, bearish, indecisive, indecisive, bullish, 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 indecision, indecision. Is it okay, sir? There are only three categories of candles. You need to do the way it was done here. Is it okay? Are you now convinced that there are only three candles types: bullish, bearish, and indecisive? If you are agreeing with me, at least type an okay, sir. Or that's fine. That's fine. See, this is what is required when we start simplifying the charts, and this is just the first step. I mean, the next stories are going to be amazingly beautiful. If you like the first one, I'm 100% sure you're going to like all the stories that we're going to discuss from now on. Now, let's look at a few of the patterns. Okay, I'm identifying for you because we don't have that much time. That is an engulfing bullish. This pattern is a practically gap open engulfing bullish. I'm going to take an arrow here. That is a practical morning star. 3, 4 candles completed. This is a morning star. We have identified bullish patterns on the rising market, please. That is what we need to do. And if I flip the chart to a Euro USD from September 2024 until today, it's been a wonderful drop. So the first pattern, which I would like to identify, here is an evening star. Before that, you would identify this as a practical engulfing bearish. This is a beautiful engulfing bearish. Again, that entire story, this combination, 1, 2, 3, 4, evening star, a huge evening star. Again, a practical engulfing bearish. Each time the market wants to turn lower, please remember, each time the market wants to turn lower in a dropping market, it will invariably produce one bearish signal. And each time the market wants to produce or turn higher in a rally, it will invariably produce a bullish signal. Okay, now this works on any time frame, sir. I can flip the chart to an hourly. You can identify the signals here. That's an evening star. You see, that's a tweezer top, not an ideal one, but you can take this as a category of an evening star. That's an engulfing bullish, bearish, sorry. Again, from here, the market is preparing to turn on the higher side. Now, the stories will keep overlapping. We are going to analyze the same chart, like the euros, the dollar index, the gold, Dow Jones, all the same charts, but every time we are going to add on to that. The next time we meet, we are going to add on the same chart the rules, that is the support and resistance stories. And believe it or not, by the end of that story, you will, all of us will have, without Fibonacci, without trend lines, without anything else, all of us will be able to identify the the most probable direction the market is expected to take, just by looking at the support and resistance and the patterns. All right, sir. I think with that note, if you have any questions for this session, please let me know. I can address it now. Or if you have questions later on, kindly note the email harsh.jappi, harsh.japwe at gtcfx.com is my email. Please kindly feel free to write an email any moment for any questions or doubts that you may have. Once again, I would like to encourage all of you to please kindly spread the word or help spread the word for these educational sessions. And allow me to just, uh, I'm sending two links here. One is the educational link, and the other one is the live trading sessions that we are starting from 17th of January, that is this Friday. I would like to humbly request and encourage all of you to please participate in the live analysis session. You're going to love it because it's all pure Elliott wave technical analysis in real time, just before the most important event of 2025, that is Mr. President elect Trump's uh, inauguration to be held on 20th. Before that, 3 days before that, technically what the stories are saying, we'll be analyzing, and should be able to trade with confidence thereafter. It is the same time, Karthik, 4 p.m. Dubai time. You can register. I have sent the link for the live analysis session, and these live analysis sessions are going to go on for the entire 2025 until December 26th, 2025. We are going to do 50 sessions. You just register once, and you will be registered for all 50 sessions. You register once for the educational, you will be registered for all the 10 sessions. You just need to mark up this particular link which you have used to join today. There is no need to register again every Tuesday. And kindly spread the words among traders and among clients, among partners, and it'd be wonderful to see you all there. Once again, I thank you all for your time here, and see you next Tuesday with another story. Thank you, Mr. Karthik, Vijayji. Thanks, Wafid, Mr. Tahir, Mail. If I miss anyone, please excuse me. Thank you, Harsh. Thank you, Roja. Okay, Atul. Okay, thank you. Yeah, thank you, Mr. Islam. The upcoming stories, you will love those. I would like to see. I would want to see you all coming back on the next Tuesday. Thank you very much, Vijay Kumar. So much, Shekhar. Thank you, sir. Thank you, Islam. நல்லா இருக்கீங்களா கார்த்திக்? சரி சரி, நீங்களும் தமிழ் தான் எனக்கு தெரியும். உங்க பேரு உங்க பேரு தெரியுது. Next Tuesday பார்க்கலாம் சார். Thank you, everyone. Thank you, Mr. Khalid. I was just talking with Karthik in Tamil, so please don't mind. Oh, Mr. Javeed, you are here again. Thank you so much. Good to see you, man. Good to see you. Muhammad ji, thank you again for joining. Request you to kindly spread the word, kindly spread the registration links among your colleagues and clients and traders, and let's increase the trading community. The live sessions, Karthik, we are starting every Friday, but if the demand is there, I would love to do every single day, Monday to Friday. So please register for the live sessions and help us grow them and increase the traders' activity. I'm here for increasing and spending more time with education and trading. This is what I'm here for. So we would love to do every single day. All right, thank you for registering and also help spread the word. I will see you next Friday, this Friday for the live trading session, and next Tuesday for the next story. That is the rules of the game, is support and resistance. I'm stopping the sharing for now, and thank you once again for your time, Karthik. Bye bye, Islamji. Bye, Sam. I'll see you again on the live trading for Friday and Tuesday again for the next story on the theory side. Oh, this is Phil. Okay. Okay, Philippines. Oh, that's what I see. Sorry. Nice to see you, bro. You're late there. Almost 9 up, I suppose. 9 p.m. Yeah, Philippines. I got it. Thank you for joining from the Philippines. Help us spread word for the educational and live sessions to all our Filipino brothers and sisters. Thank you again, Sam. All right, I'll end the session now, and we'll see you next Friday, this Friday, and next Tuesday. Yeah, Mr. Khalid, the session will be recorded in a few hours. Will be ready to download. Kindly send me an email, and I will send it to you. Or when you come the next session, you can have the past session recording. You have my email address, right? So please send me an email if you want it immediately, or at least next time when you are here, the recording will be there with you, as you wish. Yeah, thank you. Thank you so much. I hope you have the email. Yes, please send me and I will send across. Thank you, everyone. Please take care. Goodbye.